Very good morning from London. Has been a rather damp squib of a session so far in Europe. Many participants just paying attention to the overnight data we've had out of China and Japan over the weekend. Firstly, there was a raft of Chinese data. The headline CPI reading coming in line with expectations at 2%, but all the focus remaining on the exports number out of China, dipping slightly compared to the expectation, and also for the Japanese GDP data coming in below expectations there. So we did open lower for the equity space in Europe, and generally there has been a soft tone across the board in terms of risk. The euro currency and the major currency pairs just underperforming slightly against the dollar there. Otherwise, it's generally been a focus on the news flow out of Europe. The attention still remains on Spain. We haven't yet had any indications of a bailout activation from Spain following the announcement of the outright money transactions policy out of Draghi last week. The expectations are now there for the Eurogroup meeting at the end of this week on Friday, where Spain might in fact go towards that full bailout. But again, due to the uncertainty, many market participants just fading some of the moves we've seen at the back end of last week and the huge risk on trades we did see, and therefore some profit taking across the board and the respective asset classes there. Further uncertainty just added back into the market by Greece. Over the weekend they are said to have proposed their outline of budget cuts to the Troika, and the Troika has supposedly objected to around 2 billion euros of those. Greece expected to cut around 11.5 billion euros, but again the Troika may be looking for more than this, and that ongoing Greek situation just coming back into the foray and adding some more uncertainty into the markets, and demonstrated by the weaker risk on tone across the board in the European session so far. Otherwise, as US market participants do come to the market today, much attention will be back turning on Thursday and the Fed meeting, where we are expecting the next round of quantitative easing out of the Fed. We are expecting lots of commentary in the run-up to that over the next few days, and we haven't really got much in terms of market moving information out of the US, so lots of focus will be then on the news flow regarding any potential movement out of the FOMC. That's enough from me. Hope you have a good trading day.